Is buying a house in the Bay Area in 2025 still worth the price? Picture this, you've been saving up for years, dreaming of buying your first home. Maybe you're one of the lucky ones that have a ton of stock options and you are waiting to exercise so you can jump into this crazy Bay Area housing market. But what if I told you that renting might actually be the smarter financial move right now, especially here in the Bay Area? Sounds crazy, right? In the Bay Area, renting is generally more affordable than purchasing a home. The median monthly rent for a one-bedroom apartment in San Francisco is around $3,000, whereas the median monthly cost of owning a home is almost $6,000. That's quite a premium for home ownership. And that's according to Realtor.com, by the way, not just me. This trend is consistent across the Bay Area. In San Jose, the median monthly rent is over $3,100, while the median monthly mortgage payment is around $4,600 or above $4,600. You get the picture, right? It's expensive to own here. The high cost of home ownership in the Bay Area is attributed to factors such as limited housing supply, high demand, and stringent zoning regulations, which collectively drive up property prices. Let me show you a quick example. Look at this, guys. Do a search on Zillow for rental properties. Let's take, for example, this house in Berkeley. It's for rent for $5,800 per month. Do you know what your monthly payment will be for this same house if you were to buy it? Over $10,000. That's almost double. In this video, we're breaking down the ongoing affordability crisis here in the Bay Area and what it means for you. First, we'll uncover all the costs associated with home ownership, including those unexpected expenses like property taxes and maintenance that can make owning a home feel like a financial burden. Then we'll tackle the question, is renting the new American dream? That's whether you're here in the Bay Area or any other part of the US. As preferences shift here in the Bay and with the continued push for work from home, more and more people are discovering the freedom and flexibility that renting offers. And if you're still set on buying, don't worry. I'll share with you my top tips for navigating our crazy housing market and staying competitive as a first-time home buyer in today's challenging market. By the way, if you need a realtor, my information is in the description below or in the pinned comments. Finally, what's in store for 2025? Will there be a housing market crash? Where's the market headed? So let's get started. If you have lived in the Bay for a while now, telling you that the cost of housing has skyrocketed since the pandemic would be an understatement. Whether you're signing a new lease or trying to buy a home, it's gotten way more expensive. Now, to be fair, there's a possibility that the gap could also get a little bit less next year. That is, if mortgage rates continue to drop and rents continue to go up. However, with home prices continuing to go up as well, don't expect any significant drop in the gap. So you might be wondering, is it smarter to rent right now or should you still aim for home ownership? Let's start with the numbers. Nationally, it's 35% more expensive than renting an apartment. Us here in the Bay, that's more like 50% and above. Back in 2006, at the peak of the housing bubble, the gap was 33%. And we all know what happened next. The housing market crashed. And today, that gap is growing larger with no signs of an immediate reversal. Let me stop here for a quick second. I'm not saying that we are headed for a crash. I'm merely stating a fact that happened almost 20 years ago. To be very clear, our circumstances are completely different. Nationally, the average new homeowner is paying $3,300 a month, while renters are paying just $2,100. And that doesn't include hidden costs like maintenance or homeowner's insurance, which can add thousands of dollars to your yearly expenses. If you want to see how this trend plays out in your local market, try what I just shared with you earlier. Look up rental prices in your neighborhood and compare them to similar houses for sale. Say, for example, a 3-bedroom, 2-bath rental versus a 3-bedroom, 2-bath that's for sale. Factor in the mortgage payment, insurance, and taxes. You'll likely find that renting is significantly cheaper in most cases. So, if you're purely looking at this from a financial standpoint, case is closed. Renting is cheaper hands down. So what's causing this massive gap? For us here in the Bay, the biggest and number one factor is demand from well-qualified buyers. I'm talking about high income, high net worth individuals and families that have plenty of cash. I am no longer surprised at meeting first-time homebuyers that routinely has a budget of 1.5 million and above for their starter home and have more than 50% for their down payment. It is more of the norm rather than the exception. You add to this two other key factors: a shortage of homes for sale and sky-high mortgage rates, which are still hovering around the mid to high 6%. You put all this together and that is a snapshot of why home ownership is much pricier than renting now and for the foreseeable future. So again, with these added factors, renting is the more logical answer. So does it ever make sense to buy in this market? The answer depends on your situation. If you're planning to stay in a home for many years and you have the means, buying could still be a smart move. Experts traditionally advise staying in the home for at least 5 years to justify the upfront cost of home ownership, like commissions and closing fees. But in today's market, many say you should plan to stay at least 7 years to see those benefits. Let's put some numbers behind this. Let's break down the upfront cost of buying a home. Many people focus on down payment, but that's only one part of the picture. For example, if you're buying a $1.5 million property with a 20% down payment, you'll need $300,000 just for the down payment. Then there are closing costs, which can range from 3% to 5% of the purchase price. That's another $45,000. And don't forget buyer's agent fees, which are no longer guaranteed to be covered by the seller. At 2.5% to 3%, that adds another $35,000 to $45,000. And it doesn't stop there. Most lenders require you to have reserves, typically 3 to 6 months of your mortgage payment to qualify for a loan. Let's say your monthly mortgage payment is around $10,000. Multiply that by 6 and you're looking at $60,000 in reserves. Add it all up and you'll need nearly $450,000 just to get started. And even if you have that $450,000, you still need to be prepared for the hidden costs of owning a home. Let's talk about those. First, property taxes. As a homeowner, you'll pay these annually or as part of your monthly mortgage payment. They vary based on the home's value, but typically they are around 1.25% of the value of your house. If you buy into a new development, there may be mailer rules, which means much higher tax rate. Second, homeowner's insurance. This protects you from financial loss due to damage, theft, or liability claims. Premiums vary based on factors like location and home value. Here in the Bay Area, where we are prone to natural disasters such as fire and earthquake, that not only makes it even more expensive, in some cases, loss of coverage is a reality as well. Additional insurance may be required as well, and these costs have been skyrocketing in recent years. In fact, many sellers here in the Bay Area now require buyers to secure insurance before accepting an offer. Third, maintenance and repairs. This is one of the most underestimated costs of home ownership. Regular upkeep, like your furnace, plumbing, roof repair, they can quickly add up. You need to set aside 1% to 3% of your home's value annually for maintenance. For a $1.5 million home, that's $15,000 to $45,000 a year. And believe me, these maintenance issues, once they become deferred, it's bound to catch up with you. I had a client that let their sprinkler hit the house every time it would turn on. He never got around to adjusting it. Years of the water hitting that side of the house eventually led to major water damage. When it was time to sell the house, the pre-inspection revealed severe damage that went into the studs and mold was found between the studs. So make sure you are doing those maintenance upkeep. Fourth, HOA fees. If your home is in a community governed by a homeowners association, you'll pay monthly or annual fees for shared amenities and services. These fees can range from a few hundred to thousands of dollars per year and often increase over time. Some HOAs also impose fines or special assessments for major repair. In San Lorenzo, there is an HOA that governs most of the homes. Guess what? Every time there's a property for sale, all of a sudden the HOA is all over the house, checking to see if there are any violation that needs to be corrected before the sale can be finalized. Lastly, utilities and energy costs. As a homeowner, you're responsible for all utilities, including electricity, water, gas, and trash. Older homes or larger properties often come with higher energy costs. I recently had a client who moved into their dream home. The house was huge. You know what else was huge? Their utility bill. He was shocked when their utility bill arrived and it was triple compared to their old house. Maybe this is why saving for a down payment on a house is no longer what Americans are dreaming for. 2 kids, a dog, white picket fences. I hate to be such a cliche, but that's what I personally wanted. But now, at the end of 2024, that American dream of owning a home is no longer a priority. The desire for home ownership is tapering in the modern US. In a January of this year's survey of 2,000 renters, it shows a big shift in priorities. These days, flexibility and life experiences are taking center stage, pushing the traditional dream of owning a home to the back burner. Here are some of the most eye-opening insights. 41% of renters claim that their American dream has nothing to do with home ownership. 20% anticipate being lifelong renters, an uptick from 15% who indicated the same in 2021. 23% enjoy the location flexibility provided by renting. High home prices have undeniably played a role in this trend, but even those who can afford to buy are often choosing not to. The report reveals that 17% of respondents appreciate the flexibility that comes with avoiding a mortgage. As a result, the concept of being a renter by choice is gaining traction. Historically, renters were often seen as individuals who couldn't afford to purchase a single-family home. A temporary phase, maybe they're just starting out in life while they improve their financial standing to eventually become homeowners. While I believe that this is still true for some, many renters are now choosing to stay in rentals because of the appealing options available. These often include modern amenities, shared common spaces, and freedom from upkeep, insurance, and long-term commitments that come with owning a home. In fact, 66% of respondents stated that renting aligns better with their current lifestyle than home ownership. This perspective resonates even with those who are financially secure, as 33% of renters admit they could afford to buy a home that suits their needs but feel that home ownership doesn't align with their current lifestyle. The report also reveals that discretionary income is often directed towards life experiences rather than home ownership. Nearly 74% of respondents prioritize spending on activities like dining, travel, and entertainment, while 46% say they have the financial flexibility to invest in their hobbies. So with all these factors in mind, how do you make the best housing decision in 2025? Maybe you're thinking that owning a home is a great long-term investment, right? According to Warren Buffett, in a 2017 interview with CNBC, he mentioned that while he was happy with buying his home, he would have done better if he would have invested that money over the long run. He said, quote, "I would have been better off buying Berkshire shares, but felt at the time, and I still feel that for the average family, buying a home is the best investment that can be made." Unquote. This perspective shows you that even Buffett believes or also acknowledges that personal and non-financial value that home ownership can provide. If you're considering renting, there are clear advantages: lower upfront costs, flexibility to move as needed, and avoiding the hidden expenses of home ownership. Renting can be especially appealing if you're unsure about staying in one place or if you want to save more before committing to a big purchase. But if you're set on buying, planning is everything. Start by saving for not just the down payment, but also those additional costs we talked about: closing fees, agent fees, and reserves. Create a detailed budget, factoring in property taxes, insurance, and maintenance costs. And don't forget to shop around for mortgage rates. Even a small difference in rates can save you thousands over the life of the loan. One key tip: work with a lender or a realtor early on to assess your situation. We can help you crunch the numbers and determine if buying or renting aligns with your long-term goals. And if you're worried about high mortgage rates, there's some hope in the horizon. Experts predict rates might begin to decline next year. Timing your purchase carefully could save you significant money. Also, I want you to keep this in mind. If a lender or a realtor tells you not to worry about mortgage rates because you can always refinance, run away, far, far away. Here's what I mean. I had a client that bought a house back in 2021. The rate that they got was, I think, around 5.75. They were banking on rates going back down and refinancing to a lower rate because back then, that was the projection. We all know what happened, right? Rates actually skyrocketed. Now, I want to make this clear. They were qualified for the mortgage that they got. However, they were not comfortable with the monthly payment that they got. They were truly banking on rates going down so that they can lower their mortgage. And when that did not happen, they started to get into all kinds of financial trouble. Now, if you're in a situation where you can actually afford the mortgage at these rates, that's a completely different scenario than banking on rates going down. So again, be very careful, especially if they tell you, marry the house, date the rate. Remember, no one can predict the future, and you don't want to put yourself in a situation like what happened to my clients. Another tip that I can give you, familiarize yourself with the home buying process. I have a video about the home buying process right here. Check it out. If you are aware of all the nuances and the ins and outs of buying a house, hopefully you will have an easier time making decisions. Remember, in real estate, time is of the essence. If you make quick, decisive decisions, you have a better chance of winning the house if you are in a bidding war. I can't begin to tell you the number of times I have seen sellers go with buyer's offer that wasn't the highest price, but the buyers were very decisive and quick to respond. This can only happen if you know what or how the home buying process looks like. So go watch that video after this one. It's on my other channel, by the way. So make sure to subscribe here and there. Look, ultimately, the choice between renting and buying not only depends on your financial stability, lifestyle preferences, and future plans, but there's no denying it. There's something about the sense of ownership and long-term investment that buying a home can bring versus renting. You don't have to take my word. The greatest investor of all time said it himself. It's about what aligns best with your goals and what you value most in your living situation. What's most important is making an informed decision, one that fits your goals and keeps you financially secure. The housing market is challenging, but with the right strategy, you can navigate it successfully. Whether you rent or buy, every decision you make brings you closer to your version of home. And if you're wondering what 2025 will bring when it comes to the Bay Area housing market, unfortunately for you, if you're a home buyer, there are bound to be more competition as interest rates go down, and a lot of home buyers that have been waiting on the sidelines, they ultimately can't wait anymore and they jump back into the market. Hey, if you need help buying or selling here in the Bay Area, reach out to me. Thanks for watching.